You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
I just thought of a question because you're very specific to your background too, because you hear that, oh, I'm going to go be an actor in Hollywood, right? Or, hey, I want to be a big real estate investor. I'm sure you've had like a long list of the naysayers or the quote unquote the haters. Why are you doing that, Robbie? That's not how you're supposed to do it. You're supposed to do it like this, right? So maybe for those people that are just trying to get started, or they found the REITE Club, or they found some real estate investing books and they want to get going, and their friends, their family, the people that are their circle of influence right now are saying, no, that's not for you. You can't do that, right? I'm sure you never heard that before, right, Robbie?
Yeah. I mean, I don't really listen to I have my own version of reality that I live in, which is, more of a simulation theory. And I think that helps me cope with my ideas. But I think anybody is just don't listen to them. And again, people like to take advice from people who aren't doing it, right? Because they don't understand. And those are the people closest to them. I've always had a really supportive family growing up. So that was one thing that was good for me. My mom grew up in entertainment. My dad was in the Chicago Opera. So they like the artistic side, which is typically more supportive because it's about creativity, was always there for me. So I was never shy on confidence because of that, which is good. But you can like do that yourself. I think, it's when I first started learning, I've always had a good group of friends, but, when I first started my education, my friends were my audiobooks. My friends were literally, that's it. I would plow through books, paperback or audiobook all the time. Audiobook was good because when you could drive, you can go there. And that sheltered me. Those were my friends. So my friends were telling me to buy homes and, build large businesses and, try to see what the government can offer for large industries, whether it be renewables, anything. So that was what I surrounded myself with. Ultimately, you need to surround yourself with that because you will get that. Most people will think it's risky when, really the real risk is waiting for alternative effects or the economy to shut down like this to really see what kind of situation you're in. We always kind of shelter ourselves from reality like we get 2-3 takes at this life and we don't, right? Yeah. And so I think that's kind of the biggest thing is, if you have that decision, don't let other people tell you otherwise, and then surround yourself with books. That's the best thing you can do. Like if you have a great group of people around you who are already doing this, great, but you probably don't if you haven't done it yet, in which case be religious to your reading, your books, your education, and surround yourself with those same people, and you're going to feel like them as well too.
100% agree. That's how I got started into real estate investing. I literally started Googling how people get wealthy, real estate coming back over. And I started listening to podcasts and reading books. And that's because originally I didn't even know other investors. So you gotta learn somehow. And if you don't have, if the people around you, then step out of that box and just like you said, audiobooks, podcasts, all that stuff. So right now, like you mentioned as well, like the economy, there's ups and downs, like how, because you've got a lot, right? You've got businesses, you've got the properties. How are you,
got a golf course too, Mariana.
Sorry?
We just got a golf course too. So yeah, we're going to, yeah.
Nice. So you've obviously got a plan for the upside, but you got a plan for the downside as well. Like how are you doing that? And what does that look like? Because we never know, right? Tomorrow things can happen. We can get all locked down again. Who knows? But how are you planning?
Yeah. So, I mean, I keep it simple. As you know, I buy pretty, still, we have some commercial buildings, but a lot of small properties and do work on them. So my investment philosophy is the same I had when starting out, which I think is great for any investor starting out, is I like to invest in flat markets. You'll see what my philanthropic approach to investing is, but really I like going into cities where the middle class is not there, where the markets have been flat and it's been depressed for a long time, because you're basically buying an undervalued asset, especially in a place like Canada where vacancy is low everywhere. So it's not a demand issue. We have incredible demand, and this is going to increase it because a lot of people have been unable to build during this time. So, in Canada, you have this anomaly, which is, low vacancy, high cap rate cities, which doesn't exist in the States unless, you want to be collecting your rent with a gun or you're dealing with higher vacancy. So we have a beautiful city or country to invest in these small cities where you can actually make money. And you're protected from the upside, you're protected from the downside. I look at capital appreciation as the third form of wealth in real estate. Number one being, well, equity pay down is always going to be your biggest, but number one being your net cash flows. What are you doing there? Then your equity pay down. And then the third is capital appreciation, because that's the gambling one. That's the risk. And if you look at the GTA, like the difference between major metropolitan cities and the outskirts is they'll always go up to a spec price, right? It goes beyond the price of labor and lumber. Now we're like, you know what? This land is worth $1 million because a lot of people want to move here, right? And that is a total disconnect from where the actual price of build is. Whereas you go in the outskirts, you can't even get the builders can't even afford to go out there yet. Because, my take right now in Canada, if a duplex, 2,000 square foot duplex isn't 600,000 or more, the city's not quite at a middle class state yet, because that means the developer couldn't go in there and sell it for a profit, which means the homes have less money. There's less equity flowing in the economy. There's less money going to the small businesses. And that's just how it is. So I think going out to these outskirt areas where your cap rate is going to be a little bit higher, where you're below the price of build, if there's a recession and a flat market, what happens to the market? Probably nothing. It was a flat market. But the GTA and the upper middle class areas always go down first. The wealthy areas always go down first. In fact, in 2018, I think you guys remember when there was a little stagnant, the competition rose up drastically in St. Catharines all of a sudden, because people realized they weren't getting capital appreciation and they needed to rush for cash flow. So what was bad in the upper middle class areas, where most people were like, this is a safe investment, we actually got a 10-11% increase in the outskirt areas. And again, if there was a recession right now, which people are debating what could happen, well, St. Catharines has gone up in the outskirt areas still during this time. And even if it were to go down, I know it's not going to go down as far as Toronto, and ultimately you shouldn't care, because your goal is to be cash flowing on these properties so you can ride out those waves if and when they happen.
Absolutely. And that's why we always emphasize cash flow first. And it doesn't have to be an astronomical amount, but just make sure that your rents cover all of your expenses so that you can take that up and down. And this is why I'm a big proponent in those B markets as well, right? I mean, you don't have to be 5-6 hours necessarily away, but like you said, St. Catharines, there's Brantford, there's Peterborough, there's a lot of areas that still are, granted, there's a lot of investors and there's a lot of people looking at them at this point in time, but there's still a lot of areas, even within a somewhat close proximity to big city, that still makes sense. So cash flow first, mortgage pay down, and then ride the wave. But I'll tell you that a lot of those small markets have done better, in my opinion, when you look at the ups and downs, than like the Torontos or the Markhams or the Vaughns or all of those highly priced places already. People will always need a place to live. People will always need a place to rent. And, I think the more that we have immigration coming in, we've got, population increases, people just need to move further and further and further out. So those areas, they're definitely going to see that wave come through. And, some of them are already there. Some of them are probably a couple years away, 5 years away, 10 years away. But, get in there before it happens. And this is why when I was in Brantford, I'm laughing right now. I mean, I'm still writing it, and it's still got room to grow. But I mean, some properties I was buying at like 200s, high ones, they're not that price anymore. And granted, like you could still find some decent stuff regardless. But today's dollar or price in 10 years from now, even if it's like 400,000 or 500,000, in 10 years from now, it'll be a lot higher. So, start planning now and just get a little bit of cash flow. It doesn't have to be thousands of dollars of cash flow, but a little bit, it'll accumulate over time.
Yeah. And if you start, like, it's the funny part. Once you start, you're good. Like, you don't have to. I talk to people all the time about how to passively invest. Like, first thing I recommend is, like, if you're getting a property, find a really good property management company if you're not going to do it in-house, because that's important. But it just builds. It's like an automatic savings account with equity. If you do get the appreciation, you can borrow against tax-free. There's just so many advantages to that. But you're absolutely right. I mean, these like, what Canada needs is 100, 200, 300 million people. We are 100, 200 years away from being able to do that. We're the second largest landmass. We are the most sparse developed country in the world. So the most underdeveloped developed country in the entire world, period. Can't argue with it. So we know what the government wants, and that's more people in here. And we're immigrating, not during these past few months, but immigrating more than we're building. And you know how long it takes to build something. So if we got 200,000 units scheduled to be built, and we got 270,000 legal immigrants coming in, not to mention probably 50, 75,000 illegal immigrants at the same time, and we're already under 2% vacancy. We have supply and demand issues. That's it, right? And we will for a long time.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.